My name is Daryl Kwab. We begin with this story. Government has begun negotiations to establish a 5,000-acre industrial city and economic zone. The city, to be sited in the Ashanti regional capital, Kumasi, will provide basic infrastructure for economic activities, as well as potential investors that will be relocating to the region. Minister of Trade and Industry, Alan Chermantin, who revealed this to journalists, said this will be the biggest industrial park in the country to be established by the state. There's more in this report by Ebenezer Sabute.
Industrial parks are crucial to the development agenda of the country, especially when government desires to strengthen the economy through industrial transformation. Beside the export processing zones managed by the Ghana Free Zones Authority in some parts of the country, Ghana is about to have another industrial and economic zone to be located in the Ashanti regional capital, Kumasi. Minister of Trade and Industry, Alan Chermantin, explains what this development will mean to investors.
Hopefully, this will be developed together with the private sector. And then we have a big one that is coming up, which is called the Greater Kumasi Industrial City and Special Economic Zone. That is almost 5,000 acres. Again, we are working with a number of private sector investors to be able to develop that industrial city. So, ladies and gentlemen, you can appreciate that a lot of work is already being done, albeit quietly. And I am very hopeful that within the next year, within the next 2 years, these industrial parks will become the attraction all over the world, and that we can bring in private sector anchor customers who then can support government in its industrialization drive. And then also it provides an opportunity for local investors also to be able to locate their industries in enclaves that provide reliable supply of energy, reliable supply of water. You can see the infrastructure, first-class road network, and that is where I think Ghana is leading to.
He made the disclosure after touring the newly established Dawa Industrial Zone in the Greater Accra region. The project is being put together by LMI Holdings to support industrial transformation in the country. Ernesto Wusuafari is the Director of Power Business at LMI Holdings.
Also aim to provide them a facility which is efficient. You know, you have electricity available for most of the time. In fact, last year at our other location in Tema Free Zone area, electricity availability was in excess of 98.5% of the time. That is far superior to availability elsewhere. So electricity, the stability and the quality of the power that is provided is also key. We provide common user facilities like security, like high-speed data, the drainage, and the entire ambience of the place is of world-class standards.
The project is an $80 million investment expected to accommodate more than 100 industries.
Well, turning to one other big story we've been following for you today, the Monetary Policy Committee of the Bank of Ghana has maintained the policy rate after meeting last week to review the health of the economy. The committee kept the rate at which it lends to commercial banks at 20%. Addressing journalists, Governor of the Central Bank, Dr. Ernest Addison, said the move was influenced by fears that inflation could be going up due to the current developments on the global market. Listen.
The committee noted the increased pace of global growth, which is expected to continue in 2018, and the relatively subdued global inflation, supporting broad-based accommodative monetary policy stance across the major advanced economies. This has had a moderating effect on global financing conditions, with positive implications for emerging and frontier markets, including Ghana. Domestically, economic activity has been fairly robust, and the momentum is expected to be sustained over the medium term, supported by continued favorable external financing conditions. The balance of payments has performed strongly, with a trade surplus and a favorable outturn in the current account, and a higher than programmed reserve buildup, providing enough buffer against potential external vulnerabilities. Clearly, these developments are reflecting in increased confidence at home and also abroad with our external partners, evident in the tightening of interest rate spreads on Ghana's sovereign bond instruments on international capital markets. The fiscal consolidation process is on track and is expected to deliver better than programmed budget deficit in 2017, as expenditures were properly aligned to address shortfalls in revenues. Furthermore, economic activity has picked up significantly, while private sector credit growth is recovering. The non-oil sector of the economy is also rebounding after the sluggish performance in the first half of the year, supported by continued improvements in the economic fundamentals and improved investor confidence. These trends are expected to continue in 2018.
All right, meanwhile, the Association of Ghana Industries has been reacting to this, making a case for the Bank of Ghana to come up with a regulatory framework aimed at tackling the increasing trend of high average rates on the financial market. Some industry players continue to criticize the sustained decline in the trend of the policy rate. And, well, my colleague Charles Aite has been speaking to the CEO of AGI, Chuma Kwabwa, and he filed this report.
The Monetary Policy Committee has maintained the policy rate at 20%, but local industries say they wish more could be done about the reduction or maintenance of the policy rate. We're currently here at the head office of the Association of Ghana Industries, where the Chief Executive Officer, Seth Chuma Kwabwa, is insisting that more needs to be done to reduce the policy rate in order to foster growth in the private sector.
For businesses, cost of production is key, and the major determinant of the cost of production, or a major factor, is the cost of borrowing. And businesses have been crying for a reduction in the interest rates. So anything that would be done to improve that situation, it needs to be done. And the major factor here is the policy rate. So if for a year we've had that consistent stability, then probably we could have been slightly more ambitious. I can appreciate the governor's position that if you are expecting some inflationary trend, increase in inflation, then you are cautious in determining the policy rate. But, you know, caution is good. But for business people, we are also ambitious. We want to see a significant and drastic change in the system.
In the wake of the maintenance of the policy rate by 20%, one key issue that most industry players are looking out for is whether or not the maintenance is going to be reflected in the average lending rate. Of course, several industry players over the past few years have raised concern over the disconnect between the monetary policy rate as well as the average lending rate. Because in 2017, for example, in as much as the monetary policy rate was reduced significantly, we had the average lending rate across the financial institutions reduced by a little over 7%. Seth Chuma Kwabwa insists that government would have to put in place a collaborative effort in the reduction of interest rates. He believes this is the best way to go despite the achievement in the macroeconomic outlook.
What I believe, or what AGI has been saying, that Bank of Ghana needs to intervene a little bit in the interest rate situation. And I'm sure there are other means of doing that, not just fixing a cap. For example, developing a formula. You remember way back, there was a formula developed for determining the interest rate, so that within certain ranges, within certain parameters, interest rates would fall within a range, you know. And if you use that formula and you ensure that they are strictly adhering to it, I'm sure we'll see improvement in that area. The other thing has also been government's own borrowing. And significantly, we've seen improvement in government borrowing by way of the treasury bill rate. Treasury bill rate has fallen quite, significantly. So government has done well as far as competing with the private sector in the financial market is concerned. So there has been that improvement. And what I'm trying to say, there are other different ways of looking at it. our position has been that whatever it is to bring it down, do it. Capping the interest rate is one of such measures, but I wouldn't say is the best prescription at all times. If at this particular moment we think that is the best solution, we can look at it again. But it is one of the options to look at, not necessarily the very final option.
Based on the analysis by the Chief Executive Officer of the AGI, Setchuma Kwabwa, it is clear that the private sector is very much keen on getting to know where they lie when it comes to the interest rate and its reduction. From the AGI office here at the La Trade Fair Center in Accra, this is Charles Aite reporting.
I want to take you back to that press briefing organized by the Central Bank this morning. They spoke about the cryptocurrency trading, which has become popular. Governor of the Central Bank, Ernest Addison, warned against trading in those currencies, especially Bitcoins, saying it is illegal for now. He said this is because the necessary regulations are not in place to guide their use.
Yes, I mean, payments, instruments change all the time. You remember that in this country there was a time we were using cowries as a medium of exchange. So it's normal to expect that as society changes and technology improves, you will see new types of payment instruments come up. And Bitcoin is one of those types of virtual or digital currencies that have come up. In its particular case, it's a digital community currency. That is, this is a currency that is being used within a particular community to undertake global payments. And the key thing that we probably would put out in that statement is to say that it's not yet legal tender in this country. And for that reason, people have to be cautious on their approach to that. But we are looking at the new payment systems bill that will deal with the issue of digital money and electronic money. That new bill will be passed by Parliament in the next few months. And then we hope that after the bill comes out, more modern forms of payments that are issued by banks and non-banks that will be registered by the Bank of Ghana would become, covered by the laws and the regulatory purview of the bank.
You're still watching Business Live. Switching to some other news stories. The National Tax Campaign rolled out in the last quarter of 2017, and the paperless system at the ports are major contributors to the nominal growth figures in tax collection, despite the GRA not achieving overall revenue target last year. That's according to the Commissioner General, Emmanuel Kofinti, who clarified reasons behind the authority's marginal shortfall in revenue collection. This was at a press soiree organized by the GRA in Accra. He projected a tax revenue target of 39.8 billion for 2018.
Last year, the GRA was tasked to collect 33 billion Ghana cedis in taxes for government. There was, however, a negative deviation of 3.4%, indicating a marginal shortfall in revenue target. The press soiree was an occasion to express gratitude to the media as major stakeholders in revenue mobilization. The Commissioner General Emmanuel Kofinti explained why the authority missed its target in 2017.
Direct taxes, we had a target of 12.8 billion. But we collected 13.3 billion for the direct taxes. The indirect taxes, we had a target of 6.7 billion, but we collected 6.4 billion. And on the customs front, we had a target of 13.9 billion, but we collected 12.7 billion. So in a net effect, at the domestic front, we were able to exceed the target, and on the customs front, we had negative from the target. Although the authority did not achieve the revenue target set, it must be stated that our performance saw a nominal growth of 22.3% over the 2016 collection figures. Indeed, the authority really put up a sterling performance, especially in the last 6 months, but still fell short of the target marginally. Like I just said, the target was 33.4, we achieved 32.3 billion. And reasons for the performance that occurred in 2017. The value-added tax fell short of the target by 323.5 million. The implementation of the electronic point of sale device project, which was expected to have commenced in the course of the year to help improve collection of VAT, could however not start. The excise tax stamp policy was also expected to have started in the year 2017, but unfortunately we could not commence implementation. A targeted compliance exercise undertaken in the course of the year break in significant amount of taxes and also blocked loopholes.
The GRA, according to him, has set a revenue target of 39.8 billion cedis for 2018 and outlined some strategies the authority is developing to ensure the figure is realized at the end of the year.
The GRA will this year come out with its third strategic plan, which is currently being developed to clearly spell out strategies that will ensure that our activities are well documented and structured to ensure their realization. The electronic point of sale device and the excise tax stamp policies, which could not be implemented last year, will commence this year. These policies are expected to increase tax revenue, reduce the incidence of VAT and excise duty suppression, and monitoring of sales, among others.
The country's earnings from its traditional exports for last year witnessed a significant increase. Figures from the Bank of Ghana show that it went up by $2.6 billion to $13.7 billion in December 2017. So what were the drivers of this significant growth in export earnings? There's more in this report.
According to figures from the Bank of Ghana, gold brought in $5.7 billion compared to $4.9 billion secured in 2016. For last year, cocoa contributed $2.7 billion, about $2 million more than what it got in 2016, while crude oil exports went up from $1.3 billion in 2016 to $3 billion ending December 2017. Sources close to government are attributing the strong earnings from the precious metal gold's increase in volumes exported. The development could help the Bank of Ghana shore up its dollar bank balance, which could go a long way to stabilize the cedi. However, the country's total import bill, as at the end of last year, stood at $12.6 billion.
You're watching Business Live. Time to bring you our interview of the day. And tax consultant and managing partner of audit tax and advisory firm Baker Tilly, Under KB Under, is calling for broad consultation between government and local manufacturers over the tax stamp policy. The Ghana Food and Beverage Association has been calling for a withdrawal of the tax stamp policy, saying government was insensitive to the plight of local manufacturers. But speaking to Joy Business, KB Anders said deep consultation with the private sector is key.
Companies should make themselves ready to grow, and by growth I mean making sure that any prospective investor who comes and is interested in being part of your business or even taking over your business gives you thumbs up as far as your accounting is concerned, and your obligations to the tax man is also concerned. Yes. So basically, to be a good corporate citizen.
What do you make about the recent tax stamp policy, which has generated so much controversy, especially within local manufacturers? What do you make of it?
At the end of the day, it's about dialogue. The government is looking for ways and means to increase revenue. Any revenue shortfalls means that the country is sick. And any astute minister will look around and see how best he or she can garner more revenue. Once this economy is self-financing, and remember, the president is quick to indicate that Ghana should go beyond aid. It falls into that philosophy. We need to be self-financing. So if there are any problems with that, I think the way forward is dialogue. But one should appreciate where the government is coming from.
Let's get some insight into how things are faring on the stock market. It's a Monday, and I'm joined in studio by Bertha Tiviga with the very latest. Let's start with the MPC's decision to hold the policy rate at 20% today. How is that good or bad for the stock market?
Okay, thank you very much. Before I even come to the stock market, earlier presentations or analysts have indicated that the AGI in particular are saying that they are not seeing that reflection in the rates at which loans are being given out at the various banks to investors, to businessmen to be able to do their businesses. Yes, it is the reality because, one, for the past 2 years, we've seen NPL rate, that's the non-performing loans rate, averagely for the banking sector go up or go as compared to previous years. So the risk of giving out loans is actually very high. That could be the reason why they are not seeing that significant drop in the lending rates as we've seen with the interest rate, that's the treasury rate and the monetary policy rate. So that could be one of the factors why we aren't seeing that. But like they said, it's supposed to be something that the government should come out with. They should come out with a strategy or they just come out with a strategy that, look, you have to reduce your rates by this margin. It should be similar, or it should be within the same range at which the NPR rate has actually come down comparing to previous years.
Well,
so
the banks have said that there are other factors they consider before they consider reducing the interest rates.
Yes, and well, they have to, before you give out loans to any person or any business, you have to look at, it's not only about the NPR rate. It is not only, that is not the only factor that they need to consider. They need to consider the risks associated with the loan that they are giving out, what the person is going to do with the business, and if the person defaults, what's going to happen. So they need to take into consideration all these measures before the loans are given out. Probably that could be one of the reasons why lending rates are still very high with our banks. And with the stock market, we've seen that with a drop in NPR rate, treasury rates came down, and there's this inverse relationship between the stock market and the equity market. I've always said it here, when interest rates are low, investors focus more or shift their attention to the equity market, and that increases the demand on the market. So we see prices of equities actually go up. And that's last year saw the equity market return more than 52%, a little above 52% averagely to investors. And we had about 3 or 4 equities returning more than 100% to investors. And that should tell you the shift, what are that implication. So lots of people now are focusing more on the equity market, and investor confidence in the equity market has really shown up. It's so high, and we are still seeing that trend in this first weeks of the year. With some equity, for instance, we have Societe Generale, which is already returning more than 40% to investors in just these few days. We are just in the 22nd day of the month, and this is how much this equity is returning to investors. Last week we had significant equities, a lot of them adding up to investors' capital. And this week, like today, by close of today's trade, we had 7 equities adding up to investors' capital without any equity losing. And we had a lot of equities trading. At the close of the day, we had 314,430 shares trading at 2.1 million Ghana cedis. And the highest trade was in gold, we traded 124,400 shares, and we expect it to go up further. It went up by 10 pesos today on the stock market. So gold is actually one of the stock picks that we're looking out for. And then we also had Total, SPL, Intravenous, which is on the GAX, add a peso to investors. And then Soji went up by 8 pesos to close at 1 CD, 19 pesos per share. And we had EcoBank going up by 2 pesos. GCB went up by 2 pesos as well to close the day. The composite index is returning averagely. That's the average returns on the stock market. It's 11.28% as of Friday. We'll have today's owned by 5, it's almost out now. And then we have the financial stock index 0.82%. And this time around, the financial equities are doing very, very well. And we're seeing the financial stock index outperforming that of the composite index.
And is this success, I'm just wondering, attributable to the, should I say, the improvement in the economy, or is it just usual around this time of the year?
Well, let me also say that the stock market is a cycle. okay, and for the past 3 years, for the past two, excluding let's say last year, the past 2 years, the stock market has returned negatively to investors. And the stock market, we always say that it doesn't remain static, like it doesn't remain bad all the time. It's bearish and then it goes up, it becomes bullish. And that's what we experienced last year. We're expecting that to continue. So let's say by end of third quarter, we should still expect these performances on the stock market. And it's actually the cycle that it's going through. But there are other factors that are also attributing to this performance. One is investor confidence. 2 is the fact that interest rates are low. Investors have shifted their focus. 3 is also speculation. And then we also have some equities that are doing very well. That's the financials of some of the listed equities are very good. And it's also actually adding up to investors' confidence to invest in those equities.
We just have about 30 minutes on this one, and because people's salaries are going to come at the end of this month. So essentially you're saying that if I have money at the end of the month, where should I invest it? I
would advise you invest in Go, EcoBank or Cal.
All right, thanks very much indeed. Bertha Tubiga with the latest on the stock market. Great to have you as always. That's it for Business Live. Thanks for watching. My name is Daryl Kwa. We've got another show for you, same time tomorrow.